Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company on a day where we didn't travel very far at all on the ASX 200. As you can see, the CBO 200 there down 0.2%. But the ASX 200 is pretty flat. 8,808 is where we head into match off. A lot of weakness coming through from the banks. That followed through to weakness from financial firms on Wall Street overnight. JPMorgan Chase CFO Jemry Barman's comments reviving a sell-off on these concerns over the proposed 10% one-year cap on credit card interest rates, and JPMorgan shares were down more than 4%. We've seen falls from the likes of XYZ, Block, of course, listed here. CBA, the big one as well, down by about 2%. But where we have seen upside is in oil at a 2-month high, and that's mainly when we get to the themes of the day because of these protests pushing prices higher. So US President Donald Trump essentially telling those people that have been, involved in this unrest in Iran to keep protesting. There has been these disruptions to Iranian crude exports, and that has overshadowed possible increased supply from Venezuela and pushed oil prices to that 2-month high. Metals momentum though, silver topping $90 for the first time today. Gold continuing on its run, 4,600. We had a new gold bug earlier on the show on the close. You can find that interview up online. John Kaczynski from Dorex, and he's saying, like $6,000, $7,000, $8,000 for gold is certainly not out of the question. It certainly continues to rise. And a bit of a tepid jobs market there too. We had the job vacancies data pretty much show us that the labour market is treading water at the moment rather than moving forward. Job vacancies down 0.2% in the 3 months to November. That was after a drop of 2.7% in the prior quarter. And that left vacancies down by just over 5% on a year earlier, but still about 44% above pre-pandemic levels. And it was really interesting. There was a fall in education and trading, but wholesale trade saw an increase. And we know, particularly if you're trying to do renovations, it's really hard to get a tradie out there sometimes, but they're certainly starting to see a pickup there. Let's have a look at some of the sectoral moves on the market today, kicking it off with some of the moves here from the banks. And of course, CBA was the big decliner today, weighing on the overall market. We also spoke earlier with Mark Jerkin from Global X ETFs about the fact that CBA might lose its mantle or hand it back again to BHP the way it's going at the moment, and lose its slot as the most valuable stock on the ASX. Macquarie Group though had a good day. Also having a quick look at what we saw in gold as we continue to see the momentum in the precious metal, Newmont in particular, up almost 2%. And a quick look at some of the energy players as well, with crude oil at those 2-month highs. Karoon in particular having a good day, up 6.5%. Rio Tinto, meanwhile, said to be engaging JPMorgan and 2 other advisors on its potential acquisition of Glencore, this according to Reuters. Bluescope shares, they actually ended a little lower. They're going to return $438 million to investors through a $1 per share unfranked special dividend. Monadelphous hit a record during trade. It's been awarded a $300 million contract with Rio Tinto. Deep yellow there as well. New CEO starting on the 2nd of Feb. And Hum Group pretty flat. It urged shareholders to vote against a bid by Jeremy Raper and Sandhurst trustees to remove 3 current directors. Let's welcome to the COB a familiar face from Adelaide, David Scott from StoneX, back from holidays. Scotty, good to see you. How did you sort of view the beginning part to the year with, geopolitical tensions in Venezuela, what's happening with the Fed and Donald Trump? A lot's been happening.
Juliette, great to be back, and Happy New Year, of course. Yes, how have I seen the start of the year? Well, apart from obviously the Ashes test, which I enjoyed watching immensely, one thing that's really caught on is that I've seen that a continuation of the trends that we saw in markets in 2025. We're seeing this ability to go and overcome these great concerns out there that exist about geopolitics and the Fed and the like, and risk assets continue to go and power on. So for the time being, that is the modus operandi clearly in these markets.
The modus operandi indeed. So new year, same themes, if you will. The push here to remove Powell from the FOMC, though. It's something that is really quite unprecedented. What do we see moving forward, and how much does this potentially play into bond markets, into currencies?
It is unprecedented, and it's not entirely unexpected. I think we've seen a lot of these moves in the past, and of course we saw that famous scene in the summer back in the Northern Hemisphere last summer, when we saw Donald Trump go and visit the Fed headquarters and really starting to go and put the pressure on Jerome Powell. Well, it looks like it's manifested again. He's claiming that it's nothing to do with him. It's all to do with the DOJ, but clearly it's part of a concerted push to go and get rid of Powell. They want him off that FOMC, not just as chair. Obviously, his term comes to an end in May, but as a member, as a governor, until the beginning of 2028. So what does it mean for bond markets and the like? Well, at the moment, it's actually working against what Donald Trump is asking for. He wants to go and try and obviously get an FOMC, which is stacked with very, very friendly individuals who want to go and see lower interest rates as well. And we're seeing a big concerted push, not only from external sources, but also within the United States to go and keep that independence intact. So for the time being, it's actually working against some of those moves that you would see. But if we do see Jerome Powell and Lisa Cook, of course, her court case starts in a couple of days as well. That's going to go and be very interesting. If we see Fed independence question, the back end of the curve in the United States will go and sell off almost certainly, and it will likely put pressure on the US dollar.
Scotty, let's talk as well in terms of what's happening here with the legality of Trump's reciprocal tariffs. He's not going to stay out of the headlines for long. That should be known tonight.
It could be, of course. We were talking about the same thing back last Friday, and we didn't get to an outcome on this occasion. Hopefully we're going to get it this time, because there's so much speculation out there. If you listen to prediction markets, they're saying that it's almost a slam dunk. It's being priced at around about 75% that the Supreme Court will rule the reciprocal tariffs as being illegal. But that's not quite the story. I don't think you can go and say that the outcome is fully priced. Yes, it might be ruled illegal, but what does it mean when it comes to tariff revenues moving forward? Can the Trump administration go and reclassify that as another form of barrier that's been put up, and that would go and allow them to continue to collect that tariff revenue? Or will it be a worst case scenario where you'd see the Supreme Court basically says you cannot go and do this. You must go and stop collecting tariff revenues and refund prior revenues. Now, no one really knows how the ruling is going to play out. I doubt it's going to be the worst case scenario. But if we get something that's kind of middle in between, it could go and have quite a big market reaction, because we have seen the US dollar strengthening by and large over the course of this year. We haven't seen a big sell-off in US treasuries. And of course, US stocks are off to the races yet again. So keep a close eye on that outcome, because if it is very detrimental, even if it is ruled illegal, then it could go and have a nasty sting in the tail.
What about, and when we look at nasty stings in the tail, what's happening in currency markets too? You're looking at Japanese yen intervention risks. I was talking to Chris Weston from Pepperstone earlier about whether or not you chase this rally or not. What do you reckon?
Look, you never want to face the BOJ on behalf of the Ministry of Finance if they choose to intervene, but it comes down to what would be the potential catalyst. And right now, the government, if it looks to intervene, it should go and stare itself in the mirror, because what is largely going on with the yen right now is being driven by homegrown forces. It wants to go and have reflationary policies. It wants to have firmer growth. It wants to have stable but firmer inflation. And the markets are simply listening to what they are saying. And so all this speculation about an election for the lower house in Japan and the prospect of Abenomics 2.0 is feeding into this yen weakness. So look, to me, if you look at what's happened in the recent past with intervention, when it comes to what the BOJ is instructed to go and do on behalf of the government, it generally is based on the speed of movements rather than the actual level where it's trading at. Yes, dollar yen is currently trading around about 160 or just beneath it, but that doesn't mean in its entirety that it means intervention is on the way. We haven't seen any big escalation in language from government officials in Japan. So to me, to go and spark a big move to go and actually pull the trigger on intervention, we'll likely have to go and see a move into the low 160s, and then we'll see what happens from there. But that is one to go and watch, because that would have a big, big impact, not only on dollar yen, but the US dollar. And of course, that would go and bring the Aussie dollar into the equation as well.
It certainly would, and some big calls on the Aussie getting to maybe 70 US cents. We also monitor what happens in China. What did the data out of China show us today, Scotty?
Well, the December trade data was exceptionally strong. Now, we're seeing some disappointment. It's not consistent, but the trade data was really good. Export growth over the year, 6.6% compared to December of the year earlier, 5.5% or so when it comes to the import side of the equation. What it's telling me is that China's still growing, but it's exceptional at repackaging and repurchasing what it ships to other parts of the world and then reroutes it back to the United States. Because if you look at all the other economic blocks that it goes to other parts of the world, they also pretty decent increases. But to the United States, exports there were down 20% on a year. Now, that kind of like, if we put the maths together, it doesn't quite fit in. So clearly, a lot of those Chinese-made exports and goods are still making their way to the United States, but under the banner of a different nation. By and large, we know that China, is looking to go and add to further stimulus measures. We know that it had a pretty disappointing end to 2025. We'll get confirmation of that shortly, which all points to the prospect of increased stimulus and hopefully something meaningful when it comes to go and spur on consumption, which is the area which is really lacking and really being a factor that's causing pessimism towards China more broadly.
Speaking of pessimism or optimism, what is your overall view of what kind of year we're going to have, Scuddy?
I think we've had a really, really strong run for risk assets in particular. And whilst I've got no doubt that we've got the ability to go and overcome a lot of those concerns out there, at some point, valuations need to go and be considered. Yes, there's a lot of concern about the fiscal trajectory of major developed economies, central bank independence, but valuations still matter at its core. And so to me, I don't see there's going to be a really pronounced decline in those areas because we're still going to have a pretty stimulatory environment unless we see a big left tail risk when it comes to geopolitics. But at the same time, where does the upside come from? Where does the earnings growth come from? Can it continue to come from the likes of AI? Look, probably, but that's already factored in. So we need something further to go and spark that. So if you ask me what's likely to go and take place this year, as a ballpark, I imagine it's likely to be pretty volatile out there at very elevated levels.
All right, Scotty, good to see you back. Thanks so much. David Scott there from StoneX, who was away from our screens because he was watching the Ashes tests, of course, coming through. The stock of the day was Neuron Pharmaceuticals. Nadine spoke with Michael Gable from Fairmont Equities, Michael Wayne from Medallion Financial.
Neuron is in a relatively strong position for a biotech, and if they can start to get some more clinical trial results moving in their favour, then there's no reason why the share price can't continue. They've had some positive updates regarding their trials, whereas Telix, on the other hand, although they've got the one very good product, some of their trial results or trial updates haven't been maybe as strong as the market was hoping. So am I going to go buy Neuron? Probably not, just because I don't know enough about it and it still remains relatively high risk. I'll just go a hold on it for now.
I don't know if I'd buy it after a jump up 8% today. And then I think for investors, you've got to run a trailing stop. So, Telix was one that we had been involved with, didn't fall in love with the company, ran a trailing stop, got out at some point. And I think you just have to do the same with this. So there will come a point where they might go through a bad patch and, maybe there's some FDA approval that gets knocked back or whatever. So you want to be able to hold onto your profit. So happy to hold, but I think our viewers need to run a trailing stop under it.
Let's have a look at the leaders and laggards in today's session. Karoon Energy having a good session along with Beach Energy with oil at 2-month highs. Neuron Pharmaceuticals had a great update. We spoke to the CEO, John Pilcher. You can find that on our website. And Lovisa rising as well on a broker upgrade. To the downside today, Block, of course we've touched on why, Reliance Worldwide, Pantoro, Digico Infrastructure REIT and Ingenia. Also having a look in the small end of town today, these companies on your screen had a good session while these ones did not. Energy World was down 10%. Looking ahead to what we can expect tonight, quite a bit out in fact in the US retail sales for January, producer prices, business inventories, housing sales and big earnings as well. Bank of America, Wells Fargo, Citigroup. Of course, we saw JPMorgan coming under pressure on that news that President Trump is trying to put a 10% one-year cap on credit card interest rates, which is likely to weigh on banks and the economy, bottom line. Tomorrow, consumer inflation expectations for January are due. The CBO 200 has finished the session down by 0.2%, while when we look at where the ASX 200 is, I think pretty flat. Actually, it had a little bit of a bounce on the close there. 12 points higher, 0.1%, 8,820. So setting a new 20-day high there. That does it for this edition of the COB. We'll be back from 9:45 a.m. Eastern tomorrow. See you then.